Hey traders and investors, it's Serge Berger here. Before I get started, I do want to quickly mention that I will be speaking at the Las Vegas Traders Expo this November the 21st, which is a Friday, on how to trade bear markets, which is a little bit of what I'm going to go through here with you guys right now. So if you're interested in that, we would love to receive you at the presentation, and if you want to meet up afterwards in person, that would be great as well. Might be hosting a little bit of an after presentation drinks thing as well. As you know, I do these daily videos based on the amount of questions I get on one topic, and I received about 15 questions on this topic alone. I think over the past, let's say, three and a half weeks or so. So I wanted to go through it because I do think it's a very important point, and it's really about how do you trade a bear market, or at least a market that's trending lower for, let's say, more than a couple of weeks. And really, the best thing to do is not to be greedy on the short side. I think a lot of people get very excited, and particularly if you're the bit more experienced traders, tend to get very excited on the prospects of shorting a stock or an index or a commodity or a currency, because they know, which is true, you can make money quicker on the short side because things go down quicker than they go up. The problem with that, as people tend to find out equally quickly, is that markets can rebound very, very, very sharply. So when in bear markets, right, you will tend to get the sharpest rallies tend to occur in bear markets. So ergo, the best thing to do in a bear market is to sell into the rallies or short the rallies as opposed to chasing the rallies, chasing the sell-offs lower. Let's take the example of the XLY Consumer Discretionary Sector Fund. And I've talked about this a couple of weeks ago, I think last week, and I discussed about the relative weakness of the XLY versus the SPY, which is the S&P 500 ETF. I'll just quickly show you this again so you know what I'm talking about. I think I need to put in a space here. Here, and you can see how this is just the ratio. In other words, consumer discretionary are getting a lot weaker versus the S&P, and you can see this is an extremely bearish pattern. I mean, it's awful, right? So if we now go back to the XLY, now, yes, it's getting weaker, but at the same time, this thing is also coming into the 200-day moving average, which is this red line. It hasn't dipped below on a daily closing basis really for longer. Hasn't really been below there since, we really got to go back. Let's call it 2011. I know there's a one-day thing here in early this year, but I can't really count that because it rebounded so quickly. But basically what you want to do here is sell into the balances. So in this case, the 200-day, it looks like we'll get a better opportunity a little bit higher, even if it's just marginally higher, to sell into that. You don't want to short into these basically support areas or this downtrend that's now looking immediate term oversold. Because like I said, you can get quickly get stopped out because the rebound can be very quickly, but also just from a psychological point of view, you are then set sort of for this thing to start dripping lower very quickly. Instead, if it keeps going higher and higher and higher, you yourself might sort of go slowly insane if you keep doing this a few times. Right? So if you look at the S&P 500, right, the SPY right now, it's sort of a similar situation. There's no real reason to short into a hole if you can get a better price on the upside. It's kind of like bull markets, right? You don't necessarily need to chase them higher. You can buy them on dips, or at least buy them on defined breakout points, right? Which a lot of times is somewhat a comparable strategy. So, but the point is, in bear markets, please make sure you sell into the rallies or short the rallies as opposed to the dips. It's easier in your pocket and certainly on your mind as well. Hope this makes sense, guys. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.